Welcome to the Deep Dive. We sift through the sources, cut the noise, and get you the insights you need. Today, we're plunging headfirst into the future of crypto, and trust me, you'll want to hear this. The crypto market is projected to surpass a staggering $6 trillion by the end of 2025. That's not just growth, that's an immense transformative shift. Our mission today, give you the shortcut. Make you truly well-informed about this rapidly evolving sector. We're extracting the most important nuggets from recent reports, analyses, especially Crypto Predictions 2025 CoinCub, and some fresh updates on Ripple and XRP.
It really is an exhilarating time for digital assets. What's fascinating, I think, is how quickly the landscape is shifting. I mean, it was once dismissed, wasn't it, as this niche speculative thing, but now it's becoming a significant, undeniable global financial player. The sheer numbers we're seeing, they tell a really compelling story about mainstream adoption.
Absolutely. And let's kick things off with that macro view, because the scale of this projected growth is just mind-boggling. We're really expecting the global crypto market cap to blast past that $6 trillion mark by the end of next year.
$6 trillion.
Yeah, but it's not just about the money flowing in, it's about people. Cryptocurrency ownership, predicted to reach an incredible 800 million people by the end of 2025.
800 million.
Think about that. That's roughly 10% of the entire global population. It's a massive jump from, 560 million owners just last year in 2024.
Right. And this widespread adoption, this surge in users, it's fundamentally changing Bitcoin's role. It's moving beyond just being a speculative asset. Bitcoin's now widely recognized as a valuable asset in both digital and traditional markets. A major catalyst for this, as you pointed out, has been the approval of Bitcoin ETFs back in 2024.
Oh, definitely.
These ETFs, they allow people to invest in Bitcoins through traditional brokerage accounts, right, without actually holding the crypto themselves. And they've brought in substantial institutional investments, absorbed over 1.5 million BTC.
Which is huge.
Yeah, about 8% of Bitcoin's total circulating supply.
Yeah.
And we're talking major financial firms here, BlackRock, Fidelity. They're getting deeply involved.
That institutional embrace is, it's truly a game changer, and it's fueling some pretty wild price predictions for Bitcoin in 2025. We're talking projections reaching, $180,000 by year-end 2025.
That's the projection.
Some analysts are even predicting prices between, say, $125,000 and $300,000. And the really bullish estimates, pushing past $700,000. When you hear numbers like that, it makes you wonder, are we really at the cusp of a paradigm shift? Plus, Bitcoin's dominance is growing, now making up 60% of the crypto market. That's up from under 50% in 2023.
And this growing legitimacy, it leads to an important question. What about national Bitcoin reserves? El Salvador was, an early, bold adopter, making Bitcoin legal tender. But now we're seeing serious interest from nations like Germany, Brazil, the Czech Republic. They're looking at integrating Bitcoin into their national reserves to hedge macroeconomic risks.
Interesting.
Yeah. And the U.S. is even exploring a plan, apparently, to convert 207,000 seized Bitcoins into a national strategic reserve. So this isn't just about individual investors anymore. It's about sovereign nations.
Okay, so what does this all mean for you listening? It means the crypto market isn't just growing fast, it's becoming deeply established, integrated into the broader global financial system. This could open up new, potentially more stable investment avenues for you, and fundamentally shift how your own financial institutions might operate as they embrace these technologies. Now, with this booming, increasingly established market, what are the engines? What's powering this massive shift and driving adoption even further? Expert, it has to be the innovations, right? Like the surging rise of stablecoins.
Oh, absolutely. Stablecoins are reshaping global transactions, no question. They're digital currencies pegged to stable assets, like the US dollar, usually. And they're making cross-border payments faster, cheaper, far more efficient, basically bypassing outdated systems like SWIFT, the traditional bank network, which is notoriously slow and costly.
Right, the old plumbing.
Exactly.
Yeah.
We're talking about daily stablecoin transactions potentially reaching $300–400 billion this year alone, led by giants like USDT and USDC. And the stablecoin market itself, projected to reach $3 trillion within the next 5 years.
$3 trillion, wow.
Yeah, potentially even surpassing Bitcoin and Ethereum in market share. That's how big this could get.
That's a staggering amount of liquidity, and it's not just for individuals, is it? Corporations are using them too.
Increasingly, yes. To hedge against foreign exchange risk, it makes sense. And the regulatory landscape is, finally catching up.
About time.
Right. We're seeing final regulations in places like the EU, Japan, UAE, Russia, and proposed regulations in the US, UK, Hong Kong. It's interesting, the US aims for that 1.1 USD reserve backing. meaning every stablecoin is backed by an actual dollar. And they're banning algorithmic variants like, well, the infamous Terra USD.
Good riddance, maybe.
Well, quite. What's particularly fascinating here is how certain regions are really leading the charge in adoption. The Middle East and North Africa region, MENA, especially Turkey, they're leading the world in stablecoin trading volume as a percentage of GDP.
Really? Why there specifically?
Well, it highlights how different regulatory and economic environments can foster innovation and rapid adoption, sometimes in unexpected places. Hedging against local currency volatility is likely a big driver, too.
Makes sense. Okay, so beyond stablecoins, decentralized finance, DeFi, that's booming too, right? And pushing self-custody wallets.
It is. DeFi is accelerating the adoption of self-custody wallets, which gives users like you much more direct control over your assets. But what's truly exciting are the innovations making it all more accessible for the average person.
Yeah, because it can be pretty complex.
Exactly. We're seeing things like account abstraction makes crypto wallets feel more like a simple bank account, gasless transactions so you don't pay a fee for every little thing, social recovery, letting trusted friends help you regain access if you lose your keys, plus AI-powered wallets, cross-chain interoperability. It's all working to lower that barrier to entry significantly.
And AI's role seems to be getting bigger across the board in DeFi.
Oh, definitely. By the end of 2025, AI agents are expected to manage something like 25% of DeFi assets, automating complex task staking, yield optimization.
So like a robo-advisor, but for DeFi.
Sort of, yeah, but potentially much more sophisticated. It's not just automation, it's unlocking new levels of efficiency, personalized financial strategies that were impossible before, making DeFi far more powerful for the individual investor. And then there's compliance. AI is becoming essential for AML, KYC.
Anti-money laundering, know your customer.
Right. Real-time blockchain monitoring, predictive analytics for regulations like TRF, that's the crypto asset reporting framework for global tax stuff. AI-powered compliance. It's not a competitive advantage anymore. It's an absolute necessity. Plus, it improves user experience. Think virtual assistants, chatbots, guiding you through complex operations.
And the innovation doesn't stop there. Tokenization of real-world assets, RWAs.
That's another huge area. Tokenizing things like real estate, bonds, government securities. It expands liquidity, allows fractional ownership. Imagine owning a tiny piece of a skyscraper. This market's projected to exceed $100 billion in 2025.
I remember Larry Fink from BlackRock calling tokens the next generation for markets.
He did. And then there's Web3 gaming, projected to become an $80 billion industry by the end of 2025.
$80 billion just for gaming.
Just for Web3 gaming. It's a massive onboarding ramp for new crypto users, especially younger people, driven by play-to-earn models, asset interoperability, owning your in-game items as actual assets.
Okay, here's where it gets really interesting. These aren't just like technical shifts in the background. They're fundamentally changing how you might interact with money, investments, even entertainment. Pretty soon, right?
Exactly. Imagine owning a fraction of a commercial building or earning real value, actual money from playing games. It's a foundational transformation we're talking about.
Okay, let's zoom out again. Geopolitics. Because it's clear there's a fierce race for global crypto dominance happening. The United States seems to be positioning itself to lead the global crypto market in 2025, largely influenced by what many reports describe as President Trump's pro-crypto policies. Now we're just reporting what the sources say here, of course.
Right, impartiality is key. But the numbers cited certainly support that narrative. In 2023 alone, the U.S. captured 30% of global crypto profits. That was $9.36 billion.
Wow. More than the next 9 countries combined.
Apparently so. They also host something like 80% of global Bitcoin ATMs, 27, almost 28% of Bitcoin nodes, 40% of Bitcoin mining, plus over 18,000 blockchain jobs, 300 plus universities churning out talent. The projections suggest U.S.-based crypto projects could control 60% of global liquidity by year-end 2025.
And that Genius Act you mentioned earlier, requiring 1.1 USD reserves for stablecoins, that spurred over $50 billion in institutional inflows.
That's the figure reported, yes.
Yeah.
And cross-border stablecoin remittances are surging too. The U.S.-Mexico corridor is a key example, saving migrant workers potentially billions annually. Average fees are cited around 0.5% versus 6.5% for traditional methods.
That's a huge difference in people's real lives.
Absolutely. It's also worth noting the emergence of these presidential meme coins, like the Trump P token. It apparently peaked at a $15 billion market cap back in January 2025. They're being seen as new tools for political finance,
But there are risks there, surely.
Oh, definitely. The SEC has raised concerns about pump and dump risks, especially with AI-generated meme coins. Promoters inflate prices, then dump them, leaving others holding the bag. And there have been reported rug pulls where developers just vanish with the money for tokens named things like Trump, Melania, Takaro, Broccoli, Libra. High-risk area.
Okay. The contrast with Europe, though, is pretty stark according to these reports. The MiCA regulation, that's Europe's big crypto framework while aiming for clarity, seems to have really diminished Europe's role, prioritizing compliance over innovation.
That seems to be the narrative, yes.
Yeah.
The sources cite a massive, almost unbelievable 99.5% decline in European crypto license companies, via SPs they were called, from 2,700 in December 2024 down to only 11 licensed CASPs of the new term by February 2025.
Just 11, from nearly 3,000.
That's what the reports claim. This regulatory chokehold, as it's described, is apparently driving talent and capital out towards more crypto-friendly regions, like Texas and Florida in the U.S., or the UAE with its 10-year Web3 talent visa. Europe's projected to see maybe a 50% decrease in blockchain jobs in 2025.
And the European Central Bank isn't exactly rolling out the welcome mat either.
No. The ECB has taken a strong anti-crypto stance in public statements, labeling Bitcoin a tool for illegal activity, rejecting national Bitcoin reserves, while at the same time actively advancing its own CBDC, a digital euro.
But innovation isn't just stopping globally, right? There are other emerging hubs finding a different path.
Exactly. Places like El Salvador, the UAE, Hong Kong, they seem to be finding a better balance maybe between oversight and growth.
Yeah.
El Salvador, Bitcoin is legal tender, zero tax policy, Bitcoin education. Tether even set up its global HQ there, the UAE. 0% crypto tax, streamlined regulations, exploring their own dirham-pegged stablecoin. Hong Kong, seeing Bitcoin as a new battleground between China and the U.S., exploring federal Bitcoin reserves too.
Interesting positioning there.
And then you have the BRICS nations, planning to allocate up to 5% of their national reserves to crypto, to hedge geopolitical risks, reduce dependence on the U.S. dollar. So if we connect this to the bigger picture for you, these regulatory decisions, they have real-world consequences. They profoundly shape where innovation happens, where capital flows, and ultimately where future opportunities might lie.
Okay, let's shift gears slightly and dive into the altcoin arena. Starting with Ethereum. Despite its huge presence, it's actually facing some significant challenges, isn't it?
It is, yeah. Ethereum's dominance is certainly threatened. High transaction costs, gas fees, scalability issues, rising competition. Now, Layer 2 solutions like Optimism and Arbitrum exist to help with scaling, make it faster and cheaper. But they tend to fragment liquidity across different networks, which isn't ideal. It reduces overall efficiency.
And this opens the door for competitors.
Exactly. Competitors like Solana, Hedera Hashgraph, Avalanche, they offer superior scalability, lower costs, and they're attracting substantial institutional capital. We've also seen NFT activity decline somewhat on Ethereum, with Solana gaining a lot of traction in that space.
And there are even some concerns about centralization with Ethereum's proof-of-stake model.
There are. A relatively small number of large entities control a lot of the state ETH. That could potentially attract SEC scrutiny down the line, some argue. But beyond these major players, meme coins are still, well, very much a wild ride.
Still going strong, huh?
Well, speculation is intense. Coins like Dogecoin, Shiba Inu, they continue to see activity driven by strong community engagement, and they're even expanding their use cases slightly, integrating into DeFi platforms, payment systems.
So evolving beyond just being jokes?
In some limited ways, perhaps. But new Reddit picks are also generating buzz. Things like MagaCoin Finance, trading under a penny, reportedly saw a 2,500% plus gain, aiming for $5 by year-end, with DeFi utility and audits claimed. Then there's Pepe, often described as chaotic, unpredictable, capable of these huge face-melting pumps and dumps. It's crucial for you to remember, these are very high-risk, high-reward plays. Definitely not for the faint of heart.
Got it. High risk. Okay, let's unpack something specific now, XRP. This is fascinating because after years under that big regulatory cloud with the SEC, it now seems positioned for significant growth, driven by real-world utility and institutional interests.
That's the narrative, yes. Ripple's nearly 5-year legal battle with the SEC is effectively concluding. They had that partial victory back in July 2023, and a formal settlement is widely anticipated by May 2025. That removes a major regulatory hurdle that's been hanging over XRP for years.
And that clarity allows Ripple to push forward.
Exactly. Ripple has been strategically expanding. They partnered with Retail Alt to tokenize Dubai real estate using the XRP Ledger's custody infrastructure. They also acquired a company called Rail for $200 million. That's to strengthen their RLUSD stablecoin integration in RippleNet's on-demand liquidity corridors, the ODL system.
ODL uses XRP for cross-border payments, right?
Correct. For instance, low-cost international payments. They're also expanding in Asia, partnering with BDACS for custody in South Korea, and focusing heavily on central bank digital currency CBDC solutions. RippleNet is already processing, reportedly, over $10 billion per month in cross-border payments.
And the underlying tech, the XRP Ledger or XRPL, how does that stack up?
Well, it's known for being efficient. Faster, cheaper, much less energy-intensive than Bitcoin. It can handle about 1,500 transactions per second standard, potentially tens of thousands with payment channels. Plus, XRP is pre-mined and it's deflationary. A tiny amount is burned with each transaction, which reduces the total supply over time. An interesting economic model.
Okay, so market dynamics. What's the price situation and outlook?
Right now, as of mid-August 2025, XRP is trading around $3.11, $3.14. It's up about 15% the last 30 days, which is healthy. There was a recent pullback, but that seems attributable to pretty normal things. Profit taking after a run-up, Ripple's regular monthly release of 1 billion XRP from escrow.
They release that every month?
Yes, though they don't usually sell it all. And also some cooling of ETF speculation after BlackRock specifically denied having XRP ETF plans currently. But overall, expert sentiment remains broadly bullish. Predictions range from $4 up to $13 in the coming months. Some analysts see maybe $5.53 as an ultimate 2025 target. More ambitious, longer-term predictions go way higher, like $178 by 2030, but that's crystal ball territory.
And the potential impact of XRP spot ETFs is still a big factor.
Huge. Multiple applications are reportedly under SEC review. Analysts estimate an 85% approval probability sometime in 2025. If approved, they estimate maybe $8 billion in ETF inflows could push XRP towards that $5-6 range. So significant potential impact there.
And you mentioned decoupling earlier, XRP moving independently of Bitcoin.
Yes, that's noteworthy. Its correlation with Bitcoin has dropped quite a bit, from 0.81 in July 2024 down to 0.58 now in August 2025. It suggests XRP is increasingly moving based on its own catalysts, the legal clarity, partnerships, ODL usage, and institutional inflows into XRP-focused investment products are apparently increasing too.
Okay, so let's try and connect these dots. How do these individual stories, like XRP's resurgence, fit into the broader crypto future we've been discussing?
Well, I think this decoupling of XRP, if it holds, is a key indicator. It suggests the market is maturing. Specific use cases, regulatory clarity, real-world adoption. These are becoming more important drivers for individual altcoins. They're not just riding Bitcoin's coattails anymore. It signals a market where projects can actually carve out their own value based on fundamental utility, not just hype or general market sentiment. And this raises an important question for you who are listening. As the market matures, how will you identify which projects truly have the utility and the adoption potential to thrive long-term, beyond just the immediate hype cycle?
That's a fantastic point to end on, really something to think about. So we've covered a lot of ground today. We've looked at the booming crypto market overall, Bitcoin's big institutional embrace, how stablecoins are revolutionizing payments. We also talked about AI getting deeply integrated into DeFi, the shifting geopolitical map of crypto leadership, and this dynamic altcoin landscape, including XRP's notable comeback story.
It's clear the digital asset space is in a period of intense, rapid transformation. No doubt about it. That convergence of traditional finance and decentralized finance, it's accelerating, driven by innovation, institutional interest, and these evolving regulatory frameworks. Even if different regions are moving at very different speeds, this isn't just about technology anymore. It's really about reshaping global economic interaction.
Yeah. And as we look ahead to 2025, maybe the crucial decision for traditional financial systems for governments around the world, it isn't whether to engage with crypto anymore, but maybe how swiftly they can adapt to this whole blockchain-driven transformation without stifling the very innovation that promises a more efficient, maybe more inclusive financial future. What will it take for every nation to find that essential balance? That's something to really mull over.